Welcome to Iraqi Dinar, your premier destination for financial insights, up-to-date coverage on global currency trends, and in-depth analysis of developments specifically surrounding the Iraqi Dinar and the Vietnamese Dong. Whether you're a seasoned investor with years of experience in currency trading or someone newly curious about the potential in foreign exchange markets, our goal is to be your go-to resource for understanding the opportunities and the risks within this dynamic financial landscape. Recently, a question has been making the rounds in investor communities and speculative circles. Could a relatively modest investment, say $2,500 or even just $250, realistically turn into a fortune? On the surface, this sounds like wishful thinking, maybe even too good to be true. But as with many unconventional investment opportunities, there's more to consider beneath the surface. A growing number of analysts, speculators, and financial insiders are shifting their focus toward the Vietnamese Dong, pointing to economic signals and historical patterns that suggest this currency may be on the verge of a major transformation. For years, the Iraqi dinar has been a focal point of currency speculation. It has drawn attention due to its potential for revaluation based on Iraq's natural resource wealth and plans for economic redevelopment. But more recently, the spotlight has begun to shift toward the Vietnamese Dong. Many now believe that Vietnam's currency could be on the cusp of a significant revaluation, something that would have enormous implications for early investors. The appeal of the Vietnamese Dong comes from two primary factors. First, its current exchange rate is exceptionally low. At the time of writing, $1 exchanges for approximately 23,000 Vietnamese Dong. That means for just $250, you can acquire more than 5 million VND. For $2,500, you might hold 50 million or more. Second, Vietnam's economy is undergoing a transformation that is nothing short of remarkable. The country has shifted from a largely agrarian economy to a rapidly industrializing, export-driven powerhouse. It has seen strong GDP growth year after year, driven by manufacturing, rising exports, favorable trade agreements, and substantial foreign direct investment. Its growing role in global supply chains and consistent economic stability are making Vietnam an increasingly important player in the international financial system. Many investors and analysts believe that this economic evolution will, sooner or later, prompt the Vietnamese government to revalue the dong to reflect the country's rising financial stature. A currency revaluation occurs when a nation adjusts the official value of its currency upward, often to better represent the country's current economic conditions. Such revaluations have occurred in other countries under similar circumstances. For example, after periods of hyperinflation, rapid industrialization, or significant improvements in national productivity, some countries have adjusted their currency values to align with new economic realities. If Vietnam were to pursue such a move, it could be financially transformative for those who hold significant amounts of Vietnamese Dong. To put things in perspective, imagine purchasing 5 million VND for $250. If the Dong were to revalue even modestly, say from 23,000 to 10,000 per USD, that holding would be worth around $500. And if it appreciated dramatically to 500 VND per dollar, your 5 million Dong could be worth $10,000 or more. These are speculative scenarios, of course, but they illustrate the potential scale of the opportunity that some investors are chasing. While it's crucial to acknowledge that these outcomes are not guaranteed, the upside is precisely what keeps the conversation going and growing. Adding to the speculation are reports of activity within financial institutions. Several insider sources and independent observers have reported that certain U.S. banks are quietly preparing for a potential surge in demand for exotic foreign currency transactions. Employees in some institutions have reportedly undergone training for handling high-volume currency exchanges, and updates are being made to banking software systems to better accommodate unusual or non-standard currencies like the dong. No banks have publicly confirmed that these preparations are linked directly to the Vietnamese dong, but the timing has raised eyebrows. Banks don't typically invest time and resources into training and system upgrades without anticipating a potential business need. This has led some to speculate that behind-the-scenes preparation may be underway for a major currency event. If you're considering entering this market, the first and most important step is to ensure that you're buying legitimate, authentic Vietnamese dong. The high demand for this currency has created opportunities for counterfeiters and shady dealers. Only purchase from reputable registered dealers, preferably those affiliated with major financial institutions or regulated under national authorities. Always ask for receipts, certificates of authenticity, and any supporting documentation. Be cautious of high-pressure sales tactics or offers that sound too good to be true. A solid investment is based on research and verification, not impulse or hype. Once you've made a purchase, store your currency securely. A fireproof and waterproof safe in your home or a bank safety deposit box are both good options. Also, keep detailed records, receipts, proof of exchange rate, and any documentation, because you may need them later, whether for tax purposes or resale validation. Not all banks currently handle Vietnamese Dong or other exotic currencies, but that is beginning to change. It's a good idea to meet with a foreign exchange officer at your bank to ask how they handle VND transactions, whether they offer buyback programs, and what documentation is required to exchange large amounts of foreign currency. Preparing for this now can save you time and frustration later. Another essential part of investing in a speculative currency like the Dong is staying informed. Don't just rely on social media or rumor-based sources. Subscribe to credible financial news outlets. Follow trusted economists and currency analysts. Monitor Vietnam's central bank policy, major economic headlines, and trade relationships, especially with key partners like the United States and China. Any of these elements could shift sentiment dramatically and influence the market. Because the global foreign exchange market operates around the clock, it's entirely possible that a currency revaluation could be announced while you're asleep or offline. Other investors in different time zones may react before you even become aware. That's why setting alerts, following official government announcements, and staying actively engaged is vital if you want to be positioned to act quickly and wisely. Of course, with every investment comes risk, and currency speculation is particularly volatile. As of today, the Vietnamese government has made no formal announcement about plans to revalue the Dong. Global financial institutions have not confirmed any such action is imminent. Currency values are influenced by a complex mix of factors including inflation, debt levels, trade balances, political stability, and international relations. That's why professionals classify investments like this as high risk, similar to investing in volatile stocks or new technology startups. You should never commit money you can't afford to lose. But if $250 is an amount you can comfortably invest, an amount many people might spend on a weekend outing or consumer electronics, it may be worth the calculated risk. It's also important to understand that if a revaluation does occur, it may happen quickly and without prior warning. History has shown that governments often implement these changes suddenly as part of larger financial reform packages or under international trade pressure. When this happens, the opportunity to act, whether to exchange your currency, buy more, or execute a financial plan, can be brief. Many investors follow not only financial reports but also diplomatic calendars, international summits, and geopolitical developments, watching for any clue that might precede a policy change or economic realignment. If you are serious about taking advantage of a potential revaluation, having an exit strategy is not optional. It's essential. Know what your target prices are. Understand what steps you would take immediately after a revaluation announcement. Speak with a financial advisor now to prepare for how taxes, capital gains, and long-term financial planning could impact your situation. If the Vietnamese Dong does appreciate significantly, your ability to retain and grow those profits will depend on what you do next. Beyond the numbers, there's a deeper reason why the Dong revaluation story has resonated with so many. In a time of rising costs, stagnant wages, and widespread financial pressure, the possibility that an ordinary person could use a small, affordable investment to create real, lasting change in their financial life is incredibly appealing. This is more than just an investment play. It's about hope. It's about believing that you don't have to be a hedge fund manager or a Wall Street insider to access powerful financial opportunities. For many, this isn't just a currency purchase, it's a vote of confidence in their own future. Even if a revaluation never happens, the increased attention around the Vietnamese Dong has already had one clear benefit. It has inspired thousands of people to learn more about economics, to explore global finance, and to better understand how money moves across borders. That kind of empowerment has value too.